Hi, welcome back to my channel. I am Tanya. Today we have a very special guest, Laura Andrade. How are you, Laura?
Hi, I am doing really good. Thank you for inviting me.
Perfect. So we're going to be talking today about some options for you buyers who are out there in the market today. So let's go ahead and start with the first question. Oh my gosh, my phone just turned off. Okay, so Laura, what would you say are your two top loan programs that you would recommend right now?
So, the very popular ones, as everybody would probably agree, is conventional and FHA. Those are the popular programs. Conventional is probably the best if you have a good credit. Everything is a perfect program, But there's a lot of government loan programs as well. There will be one launching out here with Flat Branch within a month. That's called 321, which is a buy down. You buy down the rate, and then let's say the interest rates are at 7%. The very first year will be at 4%, second year 5%, third year 6%, and then finally the rate that you got it for, which is 7%. So it gives them a little bit of leeway right now that the interest rates are pretty high to kind of like start slow and then refinance. Hopefully by 3 years or so, the rates would go down. So I would have to kind of like mingle it with the 321 to just in case customers do want to buy down the interest rate at that time.
Okay, that's a really good option, especially because your mortgage payment would start off lower, correct?
Correct. Correct. We would still need to qualify the borrower with the fixed interest rate that we had because it's not really considered an arm loan because it's a fixed interest rate. So they would just start with the lowest interest rate at the first year and then the second year and the third year. And that gives them a little bit of leeway to not have to pay that big interest rate. In case the interest rates do go down, then they will never really pay that interest rate that they got it for.
Okay, and then are there any fees that they need to worry about with this loan?
So it's just basically buying down the interest rate, buying down the points. So depending on the customer's credit, depending on how much the points are that daily basis, that would base on day to day and also their credit history.
Okay, and is this the only loan option that you've got to reduce the interest rate potentially, or do you have other options?
So any other program, they can buy down the interest rate. It will just normally, typically, will be a little bit more expensive if they want it for all the 30 years. So this would be the cheaper way to do a 321 and then refinance at a fixed rate once the interest rates are low. But in any program, they can refinance or they can buy down the points to go lower. But I mean, we're not seeing those points anymore out like threes and stuff. Like they can't buy down all the way to threes or twos because they're not out there right now. So we could see maybe fives, fours, like those kind of points that is not too expensive for the borrower to pay up front.
Okay, and then can we talk a little bit about seller buying down points? Because I know that's also an option. How does that
Yeah.
work?
Yeah, so there is a seller buy points depending on which type of program, depends how much seller can contribute to that buying. So we have one that's actually out with Flat Branch. It's called 2-1 buy down. So it's a lot of with builders. It's very famous with builders. So builders can pay up for up to 10,000 amount towards points or towards bringing down their interest rates, whatever customer wants, wherever that is money applied to. So if they're wanting, if they want to do the 2-1 buy down, then the seller will pay all the origination points up front. Customer, does first year that this interest rate, second year this interest rate, and then their fixed rate. Or the seller can just put all that for a fixed interest rate, depending on which one's best for the customer. So at that point, when the seller pays, so let's say 10,000 towards the borrower, then we can sit down with the borrower and say, okay, we have this option we have this option, which one would be best for you and your long term and how many years you're wanting to stay in the house. And that's when we talk about all the details.
Okay, okay, that's good to know. Um, and now I've also been hearing this term called loan assumption being thrown around there. Can you explain to us what that is?
Yeah, so a loan assumption is basically assuming the loan. Kind of, for example, if let's say I have a mortgage loan and my husband wants to, he's not on the mortgage loan right now, but he wants to be and get the same numbers, same interest rate, same balance, everything the same, no numbers changed, he can ask for an assuming to assume the loan and not and keep everything the same. So maybe you've been hearing a lot because probably people want to assume the loan, especially if their interest rates were like 2 years before, like 3 years, like 2 years before we were seeing interest rates at 3 and 2%. So a lot of people are probably wanting to see who can assume the loan. And it really depends on the investor who does assume the loan and who doesn't. But if the investor does allow to assume the loan, they would go through a regular application, but the terms would stay the same. So the interest rate would stay the same and everything. Many investors do not allow it. It just depends how, when they closed, it would have said in their disclosures if that loan program or if that investor was allowing that assuming the loan. But that's basically what it is. And maybe you've heard a little bit more because customers want to keep those interest rates that were 2 years before.
Yeah, yes, they do. I've been hearing it left and right, and I'm like, I know exactly what it is. I get the premise of it, but I just didn't know how or where even to start looking for that. So you said it's in the loan terms from the
Yeah.
last purchaser.
Yes. So
Okay.
it's a long term. So if they have their packet, there should be a disclosure called loan estimate or I'm sorry, closing disclosure. In their closing disclosure, it should say if it allows for the loan to be assumed or not. So they should know off the bat, the first buyer.
Okay. Okay, perfect. So now my next question is, what advice would you give to buyers in this market who are thinking to buy potentially their first house or maybe even thinking about moving into this area? What advice would you give them?
I would say to, and truly, I would say if they need a house or if they really want to invest, I would say to go ahead and do it. Even though interest rates are high, we as the lenders still look and see if they're able to afford that payment with that interest rate. So we have to do our numbers. We have to see, make sure that they're able to make that payment. And I know they're not compared to 2 years what it was before, but if we're able to pre-qualify someone, that means that they're able to make those payments and they're just gonna have to do some adjustments in their own personal life to be able to make those payments. But my recommendation is to go ahead. We live in Northwest Arkansas where there's going to be so much growth going on. So I truly think that if the people wait, we may see, houses way higher in price in 2, 3 years, maybe. And let's say interest rates do fall down in 2, 3 years, but the price of the house that you're looking at may be not the same price, and it will probably be expensive to do it later on. That's my thinking about it. Now, anything can come in the economic. We don't even know what's going to happen tomorrow, right? It could be a big crash. We don't know. Everybody, if we're living like with what we're seeing, but at the same time, we can't live scared all the time with what was going to happen in the future. But I'm not seeing Northwest Arkansas is bringing so much other businesses as well in the area that I'm seeing a growth in the area. So if the customer can get pre-qualified with the bigger interest rates, I would just say go ahead. And including, if Flat Branch, for example, we're doing rate rewind. So if they close from now till December, we're giving them that credit of $995 or fees to be able to refinance, and their refinance fees will be lower. So that way, whenever interest rates go down to refinance, so don't think that the interest rate would always be there for 30 years. Take advantage once the refinances come, that interest rates are low, for customers to take advantage to just get their payment lower. I feel like customers a lot of things like, oh my gosh, 7%, 30 years. No, but it doesn't have to be 30 years, what happened 2 years ago? We had 2%. And a lot of people would still have their payments at 9%. So they were able to refinance, and do that 2%. So I feel like it will come a point where we're gonna see interest rates lower than what we're seeing now.
I completely agree. I've been telling people that if they're thinking about buying a house, that they should just pull the trigger because in a few years the prices are going to be going up. I mean, with Walmart, Tyson, and JB Hunt bringing in so many people, it's just a matter of time. It really is.
Yes, definitely.
Okay, Laura. So I know you work for a mortgage company. Can you tell us a little bit of why it's better to go with a mortgage company?
So I see the strength in both as a bank as in a mortgage company. I worked for a bank for many years, and truly, I mean, I respect and I do think the banks has their strengths. But focusing on the mortgage company where I'm at right now is just where there's more option in working with different investors, or working with different people who be able to, let's say, best interest rates is we're a little bit more competitive on the interest rate side. So, for example, let's say XYZ versus another XYZ or YMC or whatever, banks, we're able to offer the customer this is the best interest rate that you can get with this six other companies that we work with. So we try to get the best of the customer. It is also we're a little bit more lenient to being able to approve a little bit more of different programs. We're able to be more open minded in that aspect. So I definitely think my love is to help customers be able to help them in any way. So having those possibilities, those options for the customer makes me want to more options. Like, here we don't have just this option, but we have all these options. Which one is best for you? Which one will work best? And just sit with the customer. But i I feel that that's the biggest difference. There's more ability to be able to do more programs and more flexibility and stuff like that. But again, banks have their strengths as well. So I'm not saying that one or the other is better. It's just what I've seen in my personal view.
Okay, well, perfect. And what banks can you I'm sorry, what states can you personally work in? Or are you just in Arkansas?
I'm in Arkansas and Missouri,
Missouri, okay.
but we have lenders at Flat Branch that are, licensed in any state, and it's easy to get licensed. So if there's a need of someone to be able to, they're going to be buying property over here, or we can go ahead and get a license for that as well.
Oh, okay. Okay, perfect. Um, and now how long have you been in the mortgage lending business?
It's about to be 8 years in the lending mortgage business that I've been. It's definitely something that I look back and I'm like, oh my gosh, being a while already as a mortgage in the mortgage field, but it's been a good ride. It's been a good experiences, and I've met a lot of good friends and people and everything.
Yeah, I agree. I'm about to be 6 years in May as a with my license, and I'm like, "Well, where has the time gone?"
It flies by.
Um, and I guess what would you say is your favorite part about being a lender?
The people. I honestly, Tanya, I love people. Like, I don't care if there's a customer buying a $1 million house with another customer buying a 200 or 150 or whatever, house. The people and getting them into the home, that's the biggest happiness for me. Is helping the customer. And being able to help them understand and being able to, being happy with my service. That's the most happiness that comes the most joy that comes to my heart in this business, right? So it's actually having that relationship with customers. That's, I think, the biggest thing that has kept me in this business so far.
Okay, perfect. And if someone wants to reach out to you, where can they do that?
They can call me and I will. I mean, I have a link as well that I can share. But if they want to just give me a call at 479-544-8473, and then just text me and I'll send them all my information through there.
Okay, well, perfect. Well, thank you so much, Laura, for coming on and sharing your expertise on here. I am super happy that we were able to catch up today.
Thank
And
you. Yeah.
yeah, well, thank you so much, and we'll talk later, okay?
Okay. See ya.
So I hope you guys enjoyed my conversation with Laura. I really loved having her on. And if you guys need more information about how to get pre-approved, her information is in the description below. If you guys like this video, please make sure to give it a thumbs up and subscribe to my channel. It really helps the algorithm. And if you guys are looking for more real estate investing videos, here is a great video that I made about the pros and cons about owning your own duplex. And I give some helpful tips if you guys are interested in it. Okay, well, that was all for this video, and I will see you in the next one. Bye.